SpaceX IPO is June 12th, that is 18 days from today, and the last cheap stock in the entire ecosystem is sitting right in front of you at $7, while everything else has already doubled. Here is what happened over the last 3 weeks. Redwire went up 101%, Rocket Lab went up 72%, AST SpaceMobile went up 65%, Intuitive Machines went up 54%, Planet Labs went up 19%, Filtronic went up 10%. The tsunami of capital flowing into SpaceX adjacent stocks has been exactly the correct prediction, and it is not over. Because here is what most investors are missing right now. They are looking at the stocks that already ran and asking whether there is more upside. The smarter question is whether there is one stock that has not moved yet. One stock with direct SpaceX integration, real government contracts, and a 9 times revenue growth story that the market has not priced in. There is. And it is the focus of today's video. If you want to position yourself before June 12th changes everything, hit that subscribe button right now. This is the research that matters right now. Here is what we are covering. What the SpaceX IPO actually means for the ecosystem and why the final weeks before a listing are historically the most explosive. The NASA ETF, that is the only way to own actual SpaceX shares before the IPO. Why Redwire still has upside despite already doubling. And the main event, the space tug company with direct SpaceX integration, DARPA contracts, Space Force positioning, and a market cap of $75 million that is approximately 1,000th the size of Rocket Lab. I am saving the most asymmetric opportunity for last. Let's get into it. First, let me give you the SpaceX IPO context, because understanding the mechanics changes how you think about timing. SpaceX is selling just 4% of the company at a $1.75 to $2 trillion valuation. Think about what that means. There is going to be barely any stock available relative to how many people want to buy it. When way more people want shares than there are shares available, the price goes up. It is supply and demand at its most extreme. And here is the detail that most investors have not processed yet. NASDAQ changed its rules effective May 1st so that SpaceX can join the NASDAQ 100 in just 15 days after going public instead of waiting 3 months like every other company. That means trillions of dollars in index funds and ETFs have to mechanically buy SpaceX whether they want to or not. The closest comparison is Tesla joining the S&P 500 in 2020, which ran 70 to 75% in 3 weeks on forced buying pressure alone. And critically, 30% of IPO shares are being set aside for regular retail investors at the same price institutions pay. That has never happened on a deal this big. The final weeks before an IPO historically produce the most extreme moves in ecosystem stocks. The roadshow starts June 4th. History suggests the biggest runs for adjacent stocks happen between June 4th and June 12th. The window is open right now. First stop, the NASA ETF, ticker UFO. Most investors trying to get SpaceX exposure before the IPO are buying adjacent stocks. Very few people know that there is actually a way to own SpaceX shares directly right now through a public ETF. UFO is the only space ETF that holds SpaceX directly through a special purpose vehicle currently representing approximately 10% of the fund. And here is the catalyst that makes this particularly interesting right now. The SpaceX SPV stake is carried at cost, marked at roughly a $1.54 trillion valuation. When SpaceX prices at $1.75 to $2 trillion on June 12th, that SPV position gets remarked higher overnight. That is an automatic net asset value bump baked into the fund the moment SpaceX goes public. If you want SpaceX exposure without picking individual stocks, UFO is the most direct route available in the public markets before June 12th. Second stop, Redwire, ticker RDW, current price around $17.49. Yes, Redwire has already doubled since it was featured at $8.69. And yes, I am still going to tell you there is meaningful upside remaining. Here is the valuation comparison that makes this case. Rocket Lab currently trades at approximately 90 times trailing revenue. AST SpaceMobile trades at around 500 times trailing revenue. Redwire, after doubling, trades at approximately 6 times trailing revenue. 6 times! Against competitors at 90 and 500 times. The documented SpaceX connection is real and proven across multiple missions. The Artemis contracts are real. The European Space Agency deals are real. The defense drone revenue is real. And when the entire space sector gets re-rated as SpaceX enters index funds and space-themed ETFs are forced to rebuild their position lists, the company with the most diversified real revenue and the lowest valuation multiple in the sector is the one that gets re-rated most aggressively. Here is my honest concern. After doubling in a short period, Redwire carries significantly more risk for new buyers than it did at $9. Take profits aggressively if you are already in, and size new positions accordingly. My takeaway: still the cleanest fundamental story in the space sector at a fraction of comparable valuations. Buy, but size for the risk that the stock has already reflected significant narrative premium. Now the main event, stock number 3, Momentus, ticker MNTS, current price around $7.38. Most investors have never heard of Momentus. That reaction is exactly where the opportunity lives. And here is why this is the last cheap SpaceX play before June 12th. Here is what Momentus actually does. They operate orbital service vehicles. Think of them as space tow trucks that ride into orbit on SpaceX rockets. SpaceX launches a Falcon 9 with dozens of payloads on board. Momentus's Vigoride vehicle is one of those payloads. Once in orbit, Vigoride detaches and acts as a delivery driver in space, moving satellites to their final orbits, hosting customer payloads, and providing in-space services that SpaceX does not do itself. SpaceX is the highway. Momentus is the delivery van operating on the highway. The more SpaceX launches, the more potential business for Momentus. And here is the proof that the technology actually works. On March 30th, 2026, Momentus successfully launched Vigoride 7 aboard SpaceX's Transporter-16 mission. 10 payloads on board, the spacecraft powered on, deployed solar arrays, established two-way communications with the Mission Operations Center, and completed comprehensive system checks, confirming all primary and redundant systems are operational. That is not a prototype test. That is a commercial mission delivering real payloads for real customers on a real SpaceX rocket. And Vigoride 8 is already fully manifested for early 2027. Confirmed seat on a future SpaceX launch already booked. Now here is the government validation that tells you this technology is being taken seriously at the highest levels. The March mission was backed by a $4.2 million DARPA contract and a $1.9 million contract with SpaceWorks, which is the US Space Force's innovation arm. Additional NASA contracts are also in place. And here is the defense opportunity that most investors have not connected yet. The US Space Force fiscal year 2027 budget request is $71 billion, more than double last year's allocation. Momentus is positioned for the Golden Dome space-based interceptor program and the MDA Shield contract vehicle. Both programs require space-based assets that need to be moved, serviced, and supported in orbit. That is exactly what Momentus does. The balance sheet transformation is also significant. In April, Momentus completely eliminated its convertible debt, simplified the capital structure, moved into a 61,000 square foot facility in San Jose, and quadrupled its clean room capacity. Insider buying has been happening at the director level, with multiple Form 4 filings showing purchases at current prices. And here is the revenue trajectory that puts everything in context. Management forecasted 2026 revenue of $10 million. That is a 9 times increase over $1.1 million in 2025. The absolute number is still small, but in small-cap stocks it is the rate of change that motivates repricing. A 9 times revenue growth story at a $75 million market cap is exactly the setup that creates explosive returns when the broader sector narrative provides the fuel. Think about what June 12th means for Momentus specifically. SpaceX has stated publicly they want to launch more frequently with cheaper prices and more payloads per flight. Every additional SpaceX launch is a potential Momentus revenue opportunity because Momentus is one of the very few companies actually licensed and integrated to ride on SpaceX rideshare missions. When all space-adjacent companies get repriced to reflect SpaceX's expanded launch cadence and the massive expansion of the space economy's total addressable market, investors are going to look for the small companies that have not run yet, that have not factored in anything yet, and that are actually riding on SpaceX missions. Momentus is currently 1,000th the size of Rocket Lab, with direct SpaceX mission integration, real DARPA and Space Force contracts, 9 times revenue growth guidance, and a balance sheet that was just cleaned up for exactly this moment. Here is my honest concern. Momentus is a very small company with very small revenue in absolute terms. The stock has already moved significantly from its recent lows, showing some of the SpaceX momentum is being priced in. Short interest is notable at 15.6% of float, and the path from $10 million in revenue to the valuations justified by space sector multiples requires sustained execution over years. This is high risk. Size accordingly. My takeaway: 1,000th the size of Rocket Lab. Direct SpaceX integration proven on a successful March mission. DARPA and Space Force contracts. 9 times revenue growth guidance. Balance sheet cleaned up. And the SpaceX IPO roadshow starts June 4th, with the listing on June 12th. The magnetic effect of SpaceX has already sent this stock up 67% in pre-market trading on one occasion. And the most explosive part of any IPO cycle is the final weeks. That window opens in 10 days. Let me bring this all together. 3 positions across the SpaceX IPO opportunity, each serving a different function in a portfolio. UFO gives you direct SpaceX exposure through the only ETF that actually holds SpaceX shares. It gets an automatic NAV bump on June 12th when the SPV is remarked at IPO price. Redwire gives you the highest quality fundamental SpaceX supply chain story at a fraction of comparable valuations even after doubling. Momentus gives you the most asymmetric small-cap play. The space tug company actually riding SpaceX missions with government contracts, 9 times revenue growth, and a market cap so small that any institutional attention creates outsized price movement. Here is the timeline that matters. June 4th, the SpaceX roadshow begins. June 12th, the IPO prices. History says the most explosive moves in ecosystem stocks happen in exactly this window. You are reading this on May 27th. You have 18 days. Disagree with any of my picks? Tell me in the comments. Which of these 3 are you buying before June 12th? Subscribe for weekly research on the opportunities most investors find 2 weeks too late. No sponsors, no fluff, just the analysis. See you in the next one.